Is the price action in gold and most recently Bitcoin trying to tell us something? Over the last couple of weeks, I have been highlighting a divergence where the 10-year note interest rate is going up, but we were seeing dollar weakness. This obviously could be a sign of lots of things, but one of them might be that non-US entities are selling treasuries, increasing supply, lowering prices, increasing interest rates. This occurrence, seemingly 2 short weeks ago, caused the administration to issue a 90-day pause on most tariffs. The trend has continued. I haven't checked specifically this morning, but would not be surprised to see if rates and the dollar weakness is still breaking trend. I think the bigger thing, just for average folks like us, non-economists, non sort of in the weeds currency or bond traders, something that you and I should look at is just the price action of gold, the yellow metal, and the last 48 hours Bitcoin. I don't know if you guys noticed it recently, but it certainly appears as treasury rates went up, the dollar went down, that some of that allocation has been working its way into the yellow metal. Yesterday, gold breached 3,400. This morning, it went over 3,500. Now, it is not currently trading at that, but if you look at the chart, it touched 3,500 this morning. If you take a look at Bitcoin, specifically the last 48 hours, you are starting to notice a similar trend where Bitcoin is now disconnected from the NASDAQ 100. For the longest time, Bitcoin was looked at as nothing more than, frankly, a tech stocks. The correlation was on point. However, yesterday, as the NASDAQ 100, I think, went down roughly 3%, Bitcoin was up. Now, at the open, it does appear stocks are up, but who knows how long that will last. But Bitcoin broke 90,000. Why is all of this important? Well, when you think about foreign entities selling treasuries, they are going to be liquid. Most folks, most countries will not just keep that liquidity in cash or currency. They will want to put it somewhere. And again, it appears that gold was the first choice. And perhaps Bitcoin is the second. Again, these are all trends that kind of feel like sell America. And as I've tried to talk with many investors, including Taylor from Life Goal Investments, which we did do a gold show, I think it comes out today. We talked about this is not countries de-dollarizing. This is not the BRICS countries win. This is simply prudent investing where maybe you were over-indexed, over-allocated to a certain country or fiat currency that you now are transitioning to some lower number. That lower number might be 5% lower, 10% lower, 15% lower. But regardless, if the entire world, ex the US, is selling America, that is going to increase the supply of assets and frankly drop the price of assets. X gold, X Bitcoin. It is something to think about. This could obviously reverse tomorrow, but this trend, I don't know, feels like it's picking up steam and is something that you and I should be paying attention to. Because again, one of the things that may happen if this continues and perhaps the trend grows is, again, there will be lots of emotional selling, providing opportunities for us that have the cash or the wherewithal to raise cash. Maybe we can pick up some assets on the cheap. Let's talk about some earnings that have come out in the last, 36 hours or so. Again, Tesla starts really tech earnings this afternoon. Tesla comes out after hours. It's Tuesday, the 22nd. We got Bank of Hawaii, which I always look at as kind of a small regional bank. They did quite well. They beat top line, bottom line. Cadence Bank missed on revenue, so revenue meaning top line, but they did beat on bottom. Zion Bancorp was one of the first financial institutions I saw that really missed. Zion's Bancorp missed on earnings, had a fairly weak story, frankly. That was the first financial institution, again, that I saw that had a significant miss. We also got Pulte Group. Pulte Group, home builder. If you don't know who Pulte is, always interested in those guys. Pulte beat top line, beat bottom line, so they did better than expected. They highlighted that incentives are working. If you don't know what that means, it means mortgage rate buydowns. It means closing cost credits. It means that Pulte is actively working with buyers to figure out what payment they could afford and getting them into homes. This is really nothing new. The story hasn't changed in 5 or 6 quarters. But yes, Pulte basically saying program is still working. Verizon beat top line, bottom line. Actually said it was the strongest quarterly adjusted EBITDA, earnings before interest, taxes, and appreciation ever, which I thought was interesting. And the last one we'll talk about, Synchrony Financial. Synchrony Financial really is an interesting one for you and I to follow because frankly, it's not JP Morgan, right? JP Morgan, when you think about, probably operates with, the top 10% of America's wealth. Synchrony Financial is not that, right? It covers a much broader spectrum of Americans. And thus, you might get your first look at, late payments, write-offs, things of that nature. Synchrony Financial, frankly, posted a decent quarter. They beat top line, beat bottom line, and actually raised their dividends. So, again, no stress yet. We'll see if that changes with the kerfuffle of Q2. We did get a lot of noise from the IMF this morning. The IMF out lowering GDP forecasts around the world, basically talking about policy shifts could trigger further, repricing. Actually, IMF went further in saying that policy shifts could trigger asset repricing. Again, remember how we opened this conversation, gold, Bitcoin, treasuries, things of that nature. This is asset repricing. This is allocation changing. Specifically on the GDP front, we'll do the U.S. and the globe. U.S. GDP forecast was reduced to 1.8% from 2.7%. That is a yearly number, so that is for the year of 2025. Kind of feels a little stagflationary to me, frankly. Global GDP was actually cut as well, not quite as much, but lowered from 3.3 to 2.8. So again, IMF having a very negative view on global GDP and U.S. GDP. We did get some numbers on the U.S. economy. We'll do the one that came out yesterday that I failed to talk about. The U.S. leading economic index or indicator is down -0.7. It was forecast to be down -0.5, and last month was -0.3. So again, all going in the wrong direction, all worse than expected. I do think this is going to be a trend where soft data turns to hard data. Again, the Fed has really brought that conversation up again. Historically, the last 6 to 8 weeks, soft data bad, hard data good. I think all of that is changing in real time and will only get worse when April data is finally reported. Unfortunately, that won't come out till May. Next up, we had Philadelphia Fed Service Survey. It too was weak and weaker than expected. Prior month was -32, is now -42. We are getting into territory of the service index with the pandemic. Folks, that should not give you any warm and fuzzies. That, in fact, is scary to even think about. Citigroup chief economist talking about tariffs. Tariffs are a stagflationary shock to the U.S. economy. I think we've talked about that a bunch. I do want to remind you that if you are a part of my school community or you have ever bought my How to Get Started One Rental at a Time course on Teachable, you can join this Sunday, 8 a.m., to ask me some questions. Our school community obviously has 350 amazing folks in it. My course, How to Get Started One Rental at a Time, I think has been bought over 1,000 times. So this Sunday might be action-packed. We could have 50. We could have 100 people join. So make sure you're there. Ask your questions. See what's on people's minds. I did a little bit of digging into some average American stats. You know, one of the things that we talk about with One Rental at a Time, do the work, is don't do average deals. Frankly, I want you to hear it from me. I don't want you to be average. I do not want any of my followers to be an average American. When you hear some of these statistics, it frankly should be frightening. How about this one? 69% of households have less than $1,000 in an emergency fund. Don't do that. My hope is all of you have $1,000 or on your way to having a $1,000 emergency fund. 34% of Americans have zero savings. Not good. 72% of folks have no written financial plan. Again, that's a big topic of my How to Get Your Money Right course, really understanding the plan, having a vision for the family. 38% of Americans have revolving credit card debt. Folks, did you know if you pay off your credit card, that's like an 18 or 20 or 25% return. If you can start, having a zero balance and not pay interest, that is a good thing. Last thing I had, where was it? The average American expects to need $1.26 million in retirement. If you follow my channel, hopefully you realize that I think that net worth target is really not complete. It is my hope that you take the do the work and you get to your 4 rental properties, that you get to retirement, that you have a huge 401k, but you also have 4 rental properties owned free and clear, and your retirement is better than most. In fact, if you retire with $1.26 million in your 401k and 4 free and clear rentals, I would argue that you are balling and enjoying life. So my hope is you get there. Fed President Jefferson highlighting something: a long and low inflation environment will narrow pay gaps. Typically what that means in plain English is in a long and low inflation, the low end will rise where the high end income will stay relatively flat. Again, that would be a good thing. Apollo Global Management are saying that if tariffs stay in place, we will absolutely have a recession. I will say that again. Apollo Global Management out with a declaration: if tariffs stay in place, the U.S. will absolutely have a recession in 2025. Last thing we'll go through, actually a couple more things. Why not? Mike Simonson out with the great weekly data on housing. Mike, thank you for doing this each and every week. Your Twitter feed or X feed is amazing. Home sales still trending slightly ahead of last year. I think that's going to change drastically in April and May, but we shall see. Biggest inventory jump in 3 years. Folks, we added 17,000 properties in the last 7 days. The spring selling season is here. Prices are flat year on year. Why is that important? Prices have been trending, I don't know what you would call it, less up, and may start to post year on year declines. We shall see. Price reductions now kind of stable at 35.6%. On the inventory front, one number I forgot to put is we are up 32.5% year on year. Folks, remember, 2025 is the year of the investor. Inventory is building. Supply is building. Motivated sellers are building. It is our job to be disciplined, have follow-up, and write disrespectful offers. This is the year of the investors. Some, if not many of you, could, if you're doing the work, get the best deal ever in your real estate cycle. That's just where we are. Buyers markets are amazing. They don't stick around long. So if you find yourself in one, please take advantage of that. Looks like the DOJ is asking Google to sell Chrome and potentially Android. It'll be interesting to see if this breakup happens like Ma Bell, where we are the parts worth more than the whole. It'll be interesting to see if that goes anywhere. And then the last thing, we'll talk about the CEO of Lindt Chocolate. Lindt Chocolate is a The Easter Bunny and all of that just passed. So again, Lent Chocolate says consumers are insecure. What does that mean? It means they're nervous. It means they don't know what's going on. It means inflation is real. It means job security is weak. It means we're scared. It means we're sitting on our hands and doing nothing. This is demand destruction at its finest. Folks, thank you for being a part of the live stream. We have 205 amazing people watching this. I want you to know it means the world to me that you can count on this 7:30 live. It means the world to me that you show up. I want to thank each and every one of you. You are amazing. We will be back tomorrow at 7:30 if you want to attend a live stream. And like, subscribe, comment. Have fun. Later.